Now, who wouldn't love 50% off altcoins? Well, I think that is something that is very realistically likely to happen in 2024. But let's roll that intro and then get right down into it. Hi and welcome back to the channel. Welcome back to another walk and talk video in what is a very cold United Kingdom today, and it's actually a bit of a later video. I don't normally come out this late, just towards sunset here. I normally come out a little bit earlier, so it's getting a bit dark, but hopefully it comes through on the camera okay nonetheless. Probably comes out better without the sun in the background, to be honest with you. But what we're going to do is we're going to discuss what's going on in the crypto space, right? Because we have seen some interesting volatility with Bitcoin and with some of the altcoins. And most recently, just before I actually came out and grabbed the camera here, we did see Bitcoin kind of do a bit of a scam wick to the downside, basically liquidating the longs and then straight away reverse right the way back up. I think we're about 43,300 at the point of recording this video. I think it's like 1600 hours UTC at the minute. And I think we're going to see a lot of this. I think over the next little while, probably in the next kind of few weeks or so, my expectations are that we're going to see a lot of volatility for Bitcoin and for the altcoins. That is ultimately going to benefit market makers and the exchanges, right? I think most retail investors are probably going to be really kind of scratching their heads, and they're going to be a lot of liquidations for some of their favorite altcoins, and I think we're going to see a lot of it. And why do I think this? Well, I think for the most part, when the market kind of stalls out the way that it has done, the way that like institutions and market makers, whales make their money, because they are actively trading, is basically by grabbing liquidity wherever it may be in the price chart. And so when we say scam wicks and things like that, what we really mean is the price moves to where the money is, and it can reverse very quickly if there is a significant amount of liquidity. So for example, with the move to the downside that we just saw, this happens basically because there's buy orders lower in the price chart. So price could be forced down and force those players to be buying the Bitcoin or buying the altcoins at those levels, driving the price up higher, where they can then find liquidity to sell altcoins as well. So what you tend to find is that the market can be played, specifically if liquidity and a significant amount of liquidity can be found at very specific price points, okay? Now this can be compounded down when we talk about like the futures market as well, because those contracts, when they come to expiry and stuff like that, they can be forced, or those participants can be forced into buying or selling cryptocurrencies at very specific levels, and that can cause cascading liquidations and force the price even further in one particular direction. So market makers, whales, large institutions, exchanges, use these strategies of liquidity hunting to basically force positions to get liquidated or force the price action of their cryptocurrencies in the ultimate direction that they're looking for. Now, I think the ultimate direction for Bitcoin and for the crypto market in Q1 is going to be to the downside. This isn't anything new. I've been talking about this for quite some time, and I am expecting, Bitcoin to work its way down towards $30,000, and it may even, in fact, go down a little bit lower than that. I was talking about this the other day, specifically when we look at where the volume profiles are and where people were heavily accumulating Bitcoin. It happened to be at around the $30,000 level. And this is pretty much open information that many people can see, larger institutional investors being one of them. So chances are that they are not likely to look at that data and say, look, I'm going to pay a premium for my Bitcoin, knowing that other people were heavily accumulating at lower value areas. Ultimately, they're just going to wait out or push the price into those low areas where ultimately those investors who saw all that profit and maybe held on to it all the way down essentially look to come out, and then they can buy the Bitcoin from those participants. But the other part of this argument is that when it gets to 30K, they still might not have an appetite to buy there. They may look even deeper towards $24,000, $25,000, being an area of focus for new money to come on in. So Bitcoin is going to be quite volatile. Now, I do not expect the market to kind of just move straight away, and it happens within 2 weeks and we're there. My expectations are that this is a slow grind, and we see the volatility that we saw today with these moves down, moves up, moves down, and basically this liquidity grabbing occurring as demand dries up. Okay, this is how a lot of these participants are going to be making their money during these dry spells of liquidity. So the expectation will be slow grind towards $30,000 in my opinion. And as I kind of said, who wants cheaper altcoins? Well, if Bitcoin is moving down quite aggressively towards $30,000 over a sustained period of time, many of those altcoins, in my opinion, will also see approximately a 50% discount. Now that does mean that some altcoins, some of your favorite altcoins, are more than likely going to be going down into new bear market lows. Some of them might not. Some of them may actually hold up better and stay above that level, right, of their previous bear market low. But some will unfortunately more than likely end up going down deeper. And this video isn't about creating FUD. It's not about fear, uncertainty, or doubt. This video, telling you what my expectations are and my opinions, is so that you can be prepared for the opportunity that these things could present. A dollar cost averaging strategy, and as I've mentioned it many, many times already, is a fantastic way of building up your portfolio without having to worry about trying to time the market. Ultimately, who gives a fuck about where the bottom is, as long as you've got a really good low average purchase price of the cryptocurrencies that you believe are going to perform incredibly well in that next bullish market. Trying to time the bottom, leave that to those kind of morons on YouTube and so forth, right? Trying to time the bottom ultimately doesn't work for many, but it does work for a few. Now, my strategy has been wait for a bottom, wait for a rally, and buy the immediate retracement. And that is where we find ourselves in right now, right? Let's take Bitcoin as an example. Dollar cost averaging, Chris was able to dollar cost average Bitcoin at about $15,700, something like that. And my strategy has quite simply been, I'll wait for it to bottom, I'll wait for it to rally, and then I'll buy the retracement, because the retracement is confirmation that a bottom is already in. I know where to put my stop loss, and I can just go long knowing that my stop loss is very unlikely to get hit. Or alternatively, I can buy and slowly dollar cost average into this retracement. And this is the retracement that I think we want to be buying. This is the dollar cost averaging opportunity. This is the opportunity to get into cryptocurrency before the next major bullish market starts. So like I say, who really gives a fuck about where the bottom is? We don't. What we do care about though is making sure that we have a bottom that is anchored in. Knowing that means that you can be very confident that you're not likely to go down lower. Now, like I said, many altcoins are showing that they have had bottoms in, and they are not showing us with a requirement to continue to go down. There are a few altcoins though that haven't got that confirmation, and still possible that they do go down even deeper. So dollar cost averaging regardless, I think, is a great strategy. Now we've got Bitcoin, which I think it's got a little bit of a chance that it goes down to a new bear market low, but it's a very low probability. So I'm pretty happy to say that bottom is in on Bitcoin. We dollar cost average this retracement, and we do the same for the altcoins as well, and we get ourselves in a really strong position for what I think will be a really strong Q3, Q4 going into Q1 2025. This is the year where we do majority of the dollar cost averaging work. We've done all the research during 2022 and 2023 of all the projects that we think are going to do well. We understand them. We've done all the due diligence that you need to. You know what is going to be in your portfolio. This is the time to build the portfolio, at least in my humble opinion. So why not go ahead and check out this video where I discuss a little bit more about what is going on with Bitcoin's price action, and specifically with the BTC halvings.